closing beat, everybody. Happy Tuesday. How you doing out there? Having a good day? Huh? Did you realize the markets, they can go down too? Hey, this is a quick stock market update show that we do to cover the stock market. And I really appreciate all of you that have joined us here at Jazz Wealth. We're small financial advisors, and we do this as sort of trying to gain respect in terms of knowing what we're talking about, but hopefully trying to teach you as well. We're a teaching advisory firm, so we do classes every week. I'm constantly sending out emails to try to teach you guys how all this stuff works. So if your financial advisor is not working with you, or you don't even know who they are, I hope you'll consider us at Jazz Wealth, and do appreciate the people that have. I really appreciate that. JazzWealth.com is the website there, and we'll dive into the markets here today. We're also playing a game. It's called Guess the Dow. JazzWealth.com/Guess the Dow. We'll have that up here soon for you. But yeah, take a guess wherever you think the Dow is going to close. If you're closest without going over, $100 gift card to you if you're not one of our customers, or we'll credit you $100 to your account if you prefer that and you're one of our customers. No strings attached. There's no marketing or anything. We don't play any games like that. We're just happy that you're paying attention. So that's that one. Also, our Jazz Artist of the Week. Every week we feature a jazz artist just to expand your mind a little bit. Listen to some new jazz, old jazz, hence the name jazz, right? Put it in there. Dave Brubeck's got a song called Pick Up Sticks. And it's kind of a late night jazz song. You know what I mean? It's a after 10 o'clock jazz song, if I'm being honest with you. But anyways, that's what we got there. Let's go over the stock market here. On the right-hand side of your screen, you see the stock market performance for the day. You got the Dow down just a little bit on the day. The S&P lost a little bit. NASDAQ strong. That's a change, huh? You got to recognize these little changes in the market. There's a little change there where FAANG kind of led the way. The NASDAQ, clearly the better performer out of the group today. FAANG plus Microsoft was your leader today. If you take a look at that, FAANG does make up about 20% of the S&P 500, so you get an understanding of how the S&P held in there. If we didn't have FAANG today, it would have been a much weaker day. Also, healthcare was back as well. Two of the lagging sectors kind of picked up. That's the moral of our story today. And the Russell 2000 is, well, that's the weak one, weakest index of the day. We call it Uncle Russ here. Just a little bit of a break. It had a really strong recovery rally, so just taking a little bit of a break. I think the markets are ready for that, and it's okay if we do take a little break from here. It's official, by the way. We are in a recession. This has been marked officially a recession by the National Bureau of Economic Research. They're the ones that make those decisions. The expansion, they say, ended in February, which we probably could have guessed that. Ended in February, and we entered the recession in March. It's kind of funny that yesterday was when they marked it, which happens to be the day the S&P actually went positive for the year and erased the nonsense there, or most of the nonsense that we went through there. Anyways, this was the longest expansion in history. It went 10 years and 8 months. So in other words, 128 months. That breaks the previous record, which was exactly 10 years, set in 2001 was when we ended that. We went exactly 120 months there. And fun fact, it's likely to be the shortest recession ever on history. We'll see, but it's likely to be the shortest recession ever so far, at least at this pace, is what we've got going on. One of the things we did to highlight for our customers, the kind of things that we teach and we'll be adding in our membership site as well, was what to look for. Remember when the yield curve inversion was a big deal and everybody's like, oh no, the yield curve's going inverted and that means that we're going into a recession? Well, that was, all right. So statistically, that is a probability, but we actually share with our customers that 100% of the time, when the yield curve starts to come out of an inversion, that's when you go into the recession. So I'll share that with you guys here since it's just kind of backward looking at the moment. But take a look. We'll go over to the charts. You've got the 10 versus 2-year spread, which is what everybody looks at to go inverted. 0 is highlighted here. And what we did for our customers was just show you, look, every time that we went inverted, that did not result in a recession. Eventually it did, but you could say that about any stat that you want to put on a chart. It's in fact when the market when the yield curve started steepening again, when things started to recover for that, that's what led us into the recession. Look at every single time that happened, and that's going to happen this time as well. That stat holds true. The inversion doesn't mean anything in terms of consistent readings for a recession. The steepening is what results in the recession there. If you want to go really into the Fed stuff, maybe we can make a separate video for that. But anyways, just wanted to share that with you guys, kind of stuff we like to talk about just to really simplify everything there. I've got a couple fun facts for you here, and then we're going to tease we got a list I'm going to share with you here a little bit later. S&P is basically even for the year. Here's a couple fun facts about what's happened. Every stock in the S&P is now above their March 23rd declines. COTY was the last symbol to come up away from that. So now every single stock, all 500 of them, it's actually a few more, but all above their March 23rd lows. There are less than 10 stocks. In fact, there's 8 to be exact, even after today, that are not up at least 10% from the virus lows. I listed a few of them there for you: Walmart, Costco, and Kroger, just to name a few, but not every stock is up at least 10%, but it's kind of fun to see. We've had double-digit rallies on all but 8 stocks in that there, and I'm going to highlight this a little bit more for you. The chart on the right, what you're looking at, as of this weekend, I didn't include yesterday's data there, but every sector has double-digit gains since the virus low. The energy sector leads the way down here at the bottom, 107% rally off of its lows, and there are 4 other sectors, and then the S&P included: materials, industrials, financials, consumer discretionary, which are up over 50% from their lows. The S&P is actually up over 50% from its lows as well. Another fun way to look at this, if you like the geeky stuff, I don't know. Some people seem to like this, other people probably run away from it, but if you like the geeky stuff, here's another way to look at it. Here's what we did. A little crazy, so we don't normally do the piano key looking chart, but here's what we got. The green lines up the top are showing the gains from March 23rd lows. The red lines are showing the declines from the February 19th high. So in other words, when we hit the high, how far did each sector fall, or the average stock in the sector fall? This isn't sectors, it's the average stock in the sector. How far did the average stock in each sector fall? And then now that we've recovered since the March 23rd lows, those are 2 real clear dates that we can use. What's the average stock recovery in each sector? The moral of the story here is, if you look, for example, at energy, it suffered the worst decline on average, meaning the average stock in the energy sector fell about 60.4%. Since the recovery, the average stock has recovered 107%. So that's what we're trying to highlight. The sectors that had stocks that fell the most on average are the ones that gained the most on average. Kind of cool to see. Consumer staples only fell 25% on average, gains over 27% on average as well. And then the black line is the S&P 500. Average decline in the S&P 500 during the February 19th to March 23rd low was 39.1%, and the average rally so far has been 54.7%. So another way to highlight an extremely strong rally overall in the stock market. And a little bit later, what I'm going to share with you is the top 20 stocks that have actually recovered the most overall. If we go over to the S&P 500, here you go. There's your move. All right, taking a little bit of a break today. Not a big deal. The Dow was the weakest, did pull back the most, maybe coming back to the 200-day moving average. We'll see what happens. The NASDAQ was the strongest, and the actual NASDAQ got over 10,000. That was a mark that I saw on TV. I don't know what that means, but just got over 10,000. That's the first time ever that that's happened, if that helps you. But that's what you got going on there. Before we head over to the sector breakdown, our FinTips video yesterday was how to build a dividend portfolio. I know a lot of you look at that. What I wanted to focus on was how to build it with volatility in mind, right? We just went through a lot of volatility. That has to be an equation in your build of how you're building these portfolios. So we covered that. Tomorrow we're going to cover how much to invest if you're 42, picked an age there based on a client request. And so we're going to share that with you, not only how much to invest, but specifically where to put that money along the way. And then Friday, we're going to do thematic ETFs. We'll cover some really unique ETFs out there if you're interested. And then Wine and Wealth for our customers this Thursday, we're going to do what to do if your employer match just got cut, either in half or cut altogether. How do we make up the difference? How do we figure out what we need to do to make up the difference until that match comes back, hopefully sooner rather than later? All right, let's go over to the sector breakdown here. You got recent strong areas in the sectors. They took a break. You saw a little profit taking, financials, industrials, materials, a little bit there, and that profit moving into tech. You also got the Fed rate decision tomorrow, so understandable. There was just a little bit of a cautious trade going on today. Let's take a look. Tech led the way almost, it did 1 point break to new highs on the day. It went from the worst performer to the best performer, and a lot of that's going to be because of Apple. Apple now trading 2 standard deviations, which you know from yesterday's class only happens about 5% of the time. So it gives you an idea of how extended Apple is. This was the biggest contributor to the tech rally. It's about 20% of the XLK. So if you're wondering like what moves that sector, 20% is Apple. Some other areas that were also big contributors today, NVIDIA. NVIDIA saw almost a 3% gain on the day. And Microsoft, which is why I said FAANG plus Microsoft today, just touched new highs. on the day. It was also one of the bigger contributors. Going over to healthcare, here you go. By the end of the day, it did fall a little bit, but it's starting to wake back up again. Remember, we've been talking about this range, real quiet range here for the last couple months or so. Really hasn't done a whole lot, but all of a sudden woke up. It's up 4% over the last 1 month. And here you go. You got AbbVie, one of the leaders today, 1.6%. Vertex, our 50-day moving average trade, which we'll come back to that in a second, but bouncing off the 50-day average nicely. You guys seem to like that idea there. So that's going well. And then Dexcom, also a new S&P stock off the 50-day moving average, adding 3% on the day. We'll go over to communication services, almost back to new highs as well. It's still down 5.1, it's down 5% year to date. 13% gain in the last month there. Facebook was the biggest contributor of that today. Great day for Facebook, actually. 3% gain on the day. This makes up about 20% of the XLC as well, if you're interested. A couple random ones here. Let's do Jets. So Jets pulled back about 7% on the day. Not a big deal, right? You think that's normally a really big move for this ETF, but it's rallied about 50% in the last, just like not even 2 weeks. So really strong rally. You got to expect that that's going to take a break at some point, and today it started to do that. Energy pulled back a little bit as well. All the energy names across the board just decided to pull back, take a little bit of a break. Little extended in the short term, however, still building cause to move back to the 200-day moving average, which is the red line on my chart there. Some of the leaders in the category in terms of pulling back today, you got ExxonMobil, a little bit of a pullback there, not too big of a deal. You got Chevron, one of the bigger holdings, close enough, but still working on getting above the 200-day moving average. That one pulled back today. And then Valero, perfectly pulling back off the 200-day moving average. So got to respect that line if you happen to be a technical trader, someone to look at. We talked yesterday about Chesapeake. Chesapeake lost all of its gains. So for whatever reason, I kind of joked there. I mean, there was a lot of people buying this stock yesterday. It was an amazing rally. Today, it gave back all of it, lost 66% in the day. They are filing bankruptcy, I believe. Was halted numerous times throughout the day during this drop. So careful on these. Just be real careful. Hurts, another one. But anyways, semiconductors, not too bad. Finished the day flat. If you're looking at semiconductors, they were back in a strong way here today. You've got NVIDIA, which we already talked about. You've got AMD, really nice move here. Just trying to sort of build up momentum to break above this most recent downtrend here, and that's how you like to see it finish. This momentum that's building in here for AMD, which we'll come back to, is exactly what you want to see, as well as the volume, if you take a look at that. We'll come back to that in a second. You got crude oil higher, just slightly higher on the day. Crude oil added 1.8%, $38.92 a barrel is where that one came to, and gold added $16.80, continuing to bounce off the lower end of this range, was up to $17.21 an ounce. And so that's all technically driven here. Very strong uptrend overall, and you've got really just a bounce off of a known support area there. That's pretty much what I have for you in terms of sectors for the day. If you want to break it down in individual industries, because energy pulled back, you have things like XOP pulling back off the 200-day moving average, and oil services pulling back just a little bit as well. Not a big deal. They all had really good runs. I think it's totally be expected. All right, technical breakdown. Let's go over to that. You got 8 new highs on the day. All of them closed positive. I do believe Home Depot was the closest. Home Depot flat. So all but one of them, since Home Depot closed perfectly flat on the day, closed higher. You got names like Apple, obvious one we talked about just a minute ago. Adobe, well, actually, there you go. There's another one. Adobe pulled back right there at the end of the day, just slightly down on the day, but hitting new 52-week highs. And Autodesk, very extended in the short term, pulled back as well. Amazon, higher again on the day. One of the FAANG names added 3%, got another upgrade at Bank of America, put a $3,000 price target on it. This is analysts trying to play catch up with how far off they've been on that one there. So just a little adjustment there. And ServiceNow, I thought looked kind of interesting. Here's a strong stock in general that refuses to pull back in any meaningful way, trying to make new 52-week highs today. I think it's a little early. It's a sloppy, very sloppy breakout there, but maybe something to put on a watch list if you're taking a look at those kind of things. Yeah, 0 new lows on the day. We're going on over 4 weeks of that not happening, so that's that one there. We'll go through some of the charts here that we've been looking at, some of the technical patterns. Remember, you're in your cleanup mode for your technical traders out there. Short-term investors or traders, you're looking for cleanup mode on your watch list. Amgen bounced off 200-day moving average. You got some profit-taking decisions to make there. Win. Got to the 200-day moving average. We talked about this yesterday. You got some profit-taking decisions to make there. I can't tell you what to do, but something you want to consider. Good move there. Vertex up off the 50-day moving average, added another 2% today. I don't know if that's enough to like scalp that thing or if you're just looking for quick trades. Still looks good. Volume strong. Everything looks good there. Just nice support off the 50-day moving average. We'll see what happens. And AMD, the one I mentioned a minute ago, that'd be a new add to a watch list there. Trying to break out above the resistance area there. It's an obvious resistance area. Why did it stop right where it stopped at today? That's just simply because people didn't want to take that risk from this point going forward. Maybe it's calm for a day or two, and then you look for that to break out above there, assuming semiconductors and everybody stays strong overall. Looks good. I mean, that's the kind of thing you like to look at. All right, we'll go over a few stocks in the news, and then we'll wrap this thing up. Oh, hey, let's share this with you. Here are the top 20 stocks in terms of performance from the virus lows. Put these together here. Energy has the most number of stocks for sector-wise with half. So out of the 20, there are 10 stocks from the energy sector that are your best performers from the virus lows. And it's kind of interesting, I think, to see some of these more sensitive names, consumer discretionary, Royal Caribbean, MGM, Norwegian Cruise Lines. These are still some of your best performers, or the top performers off the virus lows. Just want to share that with you, not because you would want to chase them, but because maybe this is a watch list type thing that you look at. Maybe you go to this and say, I'm going to just keep an eye on these. If they pull back and everything continues to look good, some of these are still severely discounted, and maybe I'll come back to them. So that's why I point these kind of things out to you. In no way are they recommendations. I have to say that to stay out of trouble. Okay, Chewy, you got earnings out on Chewy there. Chewy's down about 3.25% after hours because of earnings. Let's see what happened here. Let's start with some good stuff. The good, as far as Chewy, sales up 46% year over year. Profit margin ticked higher, gross profit margin ticked higher by 23.4%. The bad, and probably what everybody's focused on, net profit margin ticks a little bit lower, not too bad, and they lost $49.7 million. I think that was a touch higher than what was expected there from them. Remember, they lose money. They don't make money, so it's a losing company there, but I'm going to bet that is the reason people were looking at that. To the downside. Hertz at one point erased all of yesterday's gains as well. This is just wild, guys. I mean, it's a company filing for bankruptcy. It was up over 800% since they announced bankruptcy. I don't think that's ever happened before. I can't recall anything in particular, going back to even the financial crisis, where that's happened. So fascinating there. We talked about Chesapeake already. Macy's going back for more debt, I believe $4 billion or so. Macy's down 7% on the day. They did see sales pick up just a little bit, but overall, no, not good. Stitch Fix breaks their record of being positive on all Q2 earnings results. It was down 5% on the day. They lost more than expected. They expected to lose 15 cents. They lost 33%. Revenue's weaker than expected. They're making some adjustments there in terms of their designers, looking to fire everybody in California and go to cheaper states. Love them or hate them. That's what they're doing. Gotta watch out for that bill. Scott's Miracle-Gro here, up 1.23% on the day. Stronger growth here in the U.S. Remember, they own some cannabis stocks if you're into that stuff. Tiffany a little bit higher on the day. They're going through a whole bunch of stuff right now, but they missed by 44 cents. Revenues came in weaker than expected. Stock still recovered there, looking a little bit better. Tesla. We'll call it flat, down 1% on the day. Ron Barron owns some ridiculous amount of Tesla. He's still very much bullish on stock, says he loves it and everything. And Wendys, last one there, almost back to 52-week highs, added 1.7% on the day. They said the beef supply is back to normal. Remember when everybody was kind of panic about that? Chicken prices, beef prices, oh my gosh, we're going to run out of beef. And Wendys is like, it's all back to normal. We're all good. That was quick. Cows just come out of nowhere, or was that initial number not right? That's something that I would ask if I was like in a press conference. I'd be like, so what happened? Did you get the numbers wrong, or did we just grow a bunch of cows somehow? I need to know, because you don't grow cows that fast. Anyways, that's what I got for you there. Earnings tomorrow. You got Chico's Fast, retailers basically, and then you have Guess as well, stocks that have done awfully well off of their lows there. United Natural Foods, this is a popular one amongst the traders. They're going to have earnings as well, expected $1.41 for that there. I'll take a chance here and try to answer some of your questions and see what we can do in terms of helping you out there. How do you know when a stock is clear from bankruptcy and okay to buy again? Well, if you're a bankruptcy hunter, like if you're looking for that stuff, that's a bit difficult to say. You would want to keep close track of what's going on with the proceedings. I wouldn't claim to have any expertise in that category, but I would stay really close to the court hearings and how everything's going with that, I guess. What do you think about the high dividend, what was it, SPHD? Yeah. A few days ago, I think about me, my favorite ticker, monthly dividend pays out 5.6. One or more people talk about this ETF. You can use it. I believe it's a lower volatility ETF, or their goal is to lower the volatility a little bit as well. I'm a big fan of that. Whenever you can, whenever you can lower volatility in an investment and not sacrifice growth, I like that. Yeah, I like it. No problem. $1 million question. Here we go. Taking into account the stats technical analysis, the beginning of another bull market, or is the bubble about to burst? Good question. Technically, we're in a bull market. The bull market started, 3-4 weeks ago. So we don't have to answer that question because we're technically in a new bull market. We have rallied over 20% off the lows. So that part gets put to rest there. I do not think that somehow we magically just walk away from all of this as if nothing happened. We will have pullbacks. There have been times like this in the past. Actually, this looks very similar to the Great Depression in terms of how the stock market's performing. So we'll see what happens. I saw, what was his name? Tillman Fertitta. He was out there essentially encouraging investors to sell. Get cash, have it ready. The markets are going to pull back. He was saying, we see the stuff happening in our restaurants, people coming back, but it's not like we expected. So he was very particular today about what he thought about that. Yep. I like it. Do you think it's time to take some profits? I wouldn't fault anybody for wanting to take a little bit of profits there. Yeah, I couldn't blame you at all, especially in the short term if you saw some of the bounces in some of these stocks. Just incredible. Yeah. Fed meeting, the rate decision comes tomorrow. Today is Tuesday. Yep, so tomorrow, June 10th. So we'll be talking about that tomorrow. Your question was, it says held for review because it thinks that was a bad word. That's hilarious. That is hilarious. So the question was about Lovesac, which is a furniture company, and it assumed that it was a bad word because of that. Oh man, up 13% on the day. Wild day of trading. Was it halted a time or two? Earnings came out, so just a wild day of trading. Obviously, people got excited about that one today. I don't have a filter set for that, so I don't know why it blocked you there. I'm sorry. What's the purpose of the membership site? Some people are around the world. They can't join us as customers. Of course, we prefer people just open accounts with us, give us a shot. But a lot of people can't participate. And so we said, well, hey, we'd like to hire a developer and have somebody sitting here full time to improve on everything that we're doing with the skill set that we just don't have. And it was either A, do a bunch of marketing, or B, why not offer something to people that maybe they would find useful. And so by us working a little bit more, maybe you find it something that you want to participate in, and it helps us. So shameless sort of fundraising effort, but I figure if I can give you something, you find a value, then maybe it's worth it. So that's just the honest answer. That's the purpose. We want to hire a developer. Always honest with you guys. Will there be a market crash tomorrow with the Fed talk? You're talking about probabilities less than 0.5% of that happening. And that would be because the Fed says something that nobody expected, and they don't do that. The Fed, since about 1994, the Fed has become very vocal about what they're going to do to lead everybody to it, and then they do it. I mean, it's almost flawless. So they don't shock you with something you weren't expecting. I would expect that tomorrow would be no different. Yeah. AMD or Intel, I can't tell you which one. I think I like the way AMD set up today. I don't know that it's a buy today, but I like the way risk to reward. I just like AMD a little bit better here. Also, the risk part of it just being where you could put a stop loss, maybe under the 50-day moving average if you're a trader on that one. So I kind of lean that way, but I'm not allowed to say here. Yeah, sorry. Not in your demographic for a customer. If you're not here in the United States, that would be the only way I could say that for sure. We're in Florida, so keep in mind we have a lot of retirees as customers. So I know a lot of people say like, oh, you're going after the kids. Well, online, yeah, a lot of young people do decide to join us. But being based in Florida, you can imagine this is the retirement capital of the world, right? So we're very much we have that skill set to work with the retiree, and do have a lot of retirees as customers. Yeah. Yeah. You're welcome, David. How much money you need to open an account? $2,000. That's the minimum at the moment to start a Roth or individual, whatever it is you're starting. Yeah, that's it. New membership site, hopefully open soon. We just have to prove we're using Stripe. We decided to build the whole thing custom rather than just go have some template or something. So the entire thing's literally it's just a custom build by us where we can share posts and videos and all kinds of great stuff in there. So it's taken us a little bit longer. Also, we have to prove to Stripe, which we're using as our payment processor, that we're not promising. They had certain rules that we have to make, and we're not doing that, but we just have to prove to them before we get accepted, which is interesting. But yeah. Is the 200-day moving average a good time to sell and the 50-day a good entry point? Well, you want to respect those two areas. It depends on where you're coming from, and the 200-day moving average is more effective when it's flat. It's less effective when it's rising or falling. That's just a long-term, that's not I didn't discover that. That's just something that technical analysis traders like to look at. So 200-day moving average being flat. The 50-day moving average is rising, then you've got that midterm trend on your side, and you would say, okay, that might be an area I'm interested in at least starting a position. So maybe we could do a moving average video again. I know I did for customers. In the dojo, there's a moving average video on every one of them. So maybe something to look at. Do you have trading classes? Typically our wine and wealth classes on Thursday. I cover what I like to cover, and then usually customers that come and join us live, they have trading questions, and we can kind of go full out talking about specifics there. I don't do them publicly just because we get in a little bit of trouble for that. We're not really, we're registered with the SEC, so a little bit higher than most advisors like to go. And so I'm not allowed to say like, oh, because this happened, this is a buy. I can lead you to it. I can let you do your own research and kind of give you a heads up. I just can't say buy. So if you mean that, then technically no. Yeah. What's the best way to learn how to evaluate companies' financials? Well, I would start slow. I would learn each individual metric that you're interested in learning. For example, price to earnings is a big one with a lot of retail stocks, things like that. You might look and start with that, get real comfortable with it, and then add in maybe profit margins and things like that, revenues versus earnings. You ever hear people say they beat on earnings, missed on revenue? You might want to learn like what that means and stuff. Don't overwhelm yourself. It's very easy to look at balance sheets, and every platform has balance sheets in them, I guess, but easy to overwhelm yourself. I would start very slow. Yeah. You think Tesla will reach $1 trillion in 10 years? Random guess. I mean, they're on the path to doing that. I have no idea. No idea. Do you use moving averages to manage portfolios? No, we do not. That's a longer term investment approach. Technical patterns don't really affect us. Changes in dividends, volatility, mergers and acquisitions, things like that. We manage our funds here like you would manage a mutual fund. So it's not a discretionary event. It has to be because we're moving outside of our objectives for each fund. Good question, though. Yeah. What should you expect to hear from Mr. Powell tomorrow? I think a whole lot of support, probably the word unlimited. Continuing would be a word they use a lot. You know, these are all tracked, by the way. There's automated systems that track them. I would expect him to say some things about maybe Congress stepping up and getting their fiscal house in order a little bit. He's been on that a lot lately. I don't think there'll be any shockers in terms of things that we just haven't heard them say already, but that's it. Yeah. Oh, yeah. I love it. Well, hey, I appreciate you watching. We're about that mark here. I like to keep this thing about 30 minutes long. If we can help you in any way, you know where to find us there. Otherwise, we'll be back tomorrow to do this all over again. And I'll wish you a great rest of your day. Thank you so much for watching. Hit the subscribe button. More importantly, check us out at Jazz Wealth. Have a great day.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.